really quick update. Today's the 6th of May. It's Wednesday, kind of midweek. Just a couple of things for you. This is super, super fast. I know I always say I'm going to be really quick, and then I end up going like half an hour or more. Today I really am going to be quick. I've got another webinar coming up here in just a few minutes. A buddy of mine's actually launching an options trading training program. So I'm going to be on to support him in what he's doing. Teaching really good, consistent, low-risk strategies. Covered calls, naked puts, vertical spreads, bull put spreads, things of that nature. Things that have a fairly low risk, also kind of a fixed reward. That you're not going to see those big 300% pops that you can see with some other types of strategies. But these are those nice, safe, consistent strategies that you can run to slowly grow an account, produce income, things of that nature. So anyway, I'm going to be on to support him and hear about what he's got to say. But I did want to take a quick second just to pop in here and give you an update. I know we've been talking this week a little bit about bounce trades. So we last week we talked about breakouts. This week we're talking about bounces. Next week we'll talk about a combo strategy of a bounce with a breakout, which I really dig a lot. I'm not a super big fan of bounces, which is why I don't talk about them a whole lot. They require a lot more patience. I'm not always the most patient person. So that's, for bounces to really happen and to hit, I feel like we have to have those, well, it depends on what time frame you're using, but I look at the 4 hour and the 30 minute and then, put my support or resistance lines in based on what's happening on a 4 hour period. So yesterday, really a textbook opportunity for a bounce trade. So I wanted to share that, show you just a kind of a real example of what happened yesterday following our call in the morning, because there was a really, again, textbook trade from a bounce perspective. So let me hit that, then we'll talk about some stuff that's coming up today that you should really be aware of if you're not already, and then I'm going to get out of here and let you get on with your day. So talking about a textbook layout for a bounce trade. Over here on the E-minis, so the S&P 500. When we were talking yesterday, we were around this area right around here. So price had already pushed up. So we were talking about potential bounces. We said price would need to come back to a key area. So we looked at 28.55 and then of course 28.46, 28.45 down here, talking about the fact that there was kind of when you're looking at bounces, you've got kind of a top edge and a bottom edge that you're really within. Price never came back to either of these for most of the day. Then end of the day, massive sell-off. But look where we did. We came right to the top edge of that. It came exactly to it and bounced. Then again, sell-off occurred. Came right back to the bottom edge here, hit it, and then bounced back up. So, safest thing is really, if you're going to play a bounce, play the bottom edge, right? Look for the bottom edge, look for the bottom edge of that, and say if we come to this period, we're going to break it. Or if you're playing the full top edge, understand that you could move, further than just that top edge for the bounce. The pros and cons, like we discussed yesterday, price doesn't always come back, right? It doesn't always come back. Sometimes it might come close to that top edge and then move back up again, in the direction that it was previously trending. We really don't know. But if we're going to play it, you've got to remember there's that range. It's the same with breakouts too. I feel like less with the breakouts. I feel good with the breakout setting us a point, and this is my top edge. This is where price is topped out for the day. If it breaks through that, I'm going to go long. Or if this is on bottom, if price breaks through that, I'm going to go short. When it comes to these bounces, because we're looking for it to go in a longer term direction, continue with longer term momentum, when price is coming back, we've got opposite momentum working, it's kind of working against us, right? So price is coming back, it's going opposite of the way we want to go. So if you're buying, you've got to buy into a big red candle, exactly what we were seeing here. This is that pucker factor. This is where, it's hard to play a bounce trade. If you're live in the market and you got, I know my top edge is at 28.55 and you've got this giant red candle, buying right there psychologically is tough. But a lot of people do it. If you've got that kind of contrarian mentality and you're into that, set it up. That's your top edge of that. This is your bottom edge of that. Certainly, you're buying into some heavy momentum that's the opposite of whatever your current trend is that you're trading with. But this is a beautiful example that occurred yesterday that is really textbook for how a bounce would work. So I just wanted to pop in, share that with you real quick. There is news coming up today. We've got some news coming up over here in about 10 minutes. The ADP non-farm report is going to come out. It's not the official non-farm payroll report. This is the ADP report. It's the precursor to the non-farm payroll. This could be a little bit of a catalyst in the marketplace. We saw some pullback yesterday at the end of the day. There's a lot of expectations around what's happening right now in the economy and things starting to open back up. It'll be interesting to see, even if the numbers aren't good. It'll be interesting to see if the market is still smoking all that hopium. They've been smoking a lot of hopium. There's a lot of hopium smoked recently because the numbers, the market seems to be moving based on nothing. Even individual stocks are having horrid earnings and should be going down, and even those are hanging at levels that are unprecedented. It's ridiculous. Anyway, so logic out the window. Remember, we say it all the time. The markets can be irrational for longer than you can be solvent. This is a proof of that. Rationality is gone. So anyway, thinking of things that are coming up today, non-farm payroll report is coming up. This could be a big catalyst. Right now we're in off-hours trading still. We're not in regular trading hours yet. So this is happening outside of regular trading hours. So volume is lighter right now. I don't know if we'll see the reaction to non-farm payroll or into the ADP report. We may not really see how the market reacts to that until it's fully digested and the regular trading hours begin at 9:30 Eastern. But just be aware if that's coming up, that could be a big market catalyst, and in Forex as well. So be aware of that. Also, tomorrow we have the employment reports. So unemployment claims come out. That'll be, those have been breaking records here over the last few weeks. So that'll be interesting. Also tomorrow, the ECB president is speaking, which will cover their economy, which could have some trickle down effect. Ripples, I shouldn't say trickle down, should be ripples. There could be a ripple effect depending on what's happening there. And then on Friday, we have the official non-farm employment change report and the unemployment rate. If things don't move today and tomorrow, Friday could be a huge catalyst for what's going on in the market. So be aware of the news that's coming up. I'm not saying to trade the news, but just be aware of the impact that it has on it. Don't get too caught up in what the news says. Often we'll get these reports and it may come out, with a big green number or a big red number. And, again, logic would say this should happen, but the market, sometimes doesn't react in that same manner. Market reacts totally opposite to that. Forget what you think should happen. Forget what, quote, should happen based on the report. None of that matters. The only thing that matters is what's happening on the chart and how your trading plan is set up to react to the things that are occurring on the chart. So that's why it's so important to figure out which strategy is going to work best for you, create your personalized strategy around that, and then take that consistent action. And that's really the biggest piece, right? Is the consistent action. Everything else is mathematical. Everything else is probabilities. I've set up this. I've looked at these filters. When these filters occur, I take a trade. When I take a trade, I use this amount of my full account. So I use this amount as my maximum exposure, my maximum risk. Here's where I take profit. All that's kind of mathematically done. It's based on quantifiable things. The only thing that's not quantifiable is your personality. How are you going to react to the current condition, what's happening in that current day? Are you prepared to take that consistent action based on your trading plan? And that's where people typically fail. That's always my biggest, I've said it before, that's my biggest challenge, is taking consistent action. Whenever I don't stick to the trading plan, bad things happen. And that's the story, across every trader out there. It's not anything that's unique to me. That's every trader's story. Follow your plan, you're good. When you start jumping around, different plan for different day, different emotion, blah, 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 you're off the rails. So anyway, that was it. Just wanted to share that real quickly and get out of here. I've got to get on to this next webinar. So I'm going to let you guys go. We'll be back tomorrow, and we'll keep talking about bounces, and then next week into that bounce with a break, which is a really cool strategy that I'm excited to show you about. All right, so have a great day. We'll talk to you soon.